I think there's indications are they will sign a deal, Brian, but I'm not sure if it's going to be that meaty. So obviously one of the biggest sticking points is this monitoring that you and I have discussed, which is even if China agrees to, say, level the playing field for market access so that American firms can own Chinese companies, acquire them, protect intellectual property rights. Are they really going to be able to accept America unilaterally imposing tariffs that the Chinese won't object to if the Americans feel the Chinese are not living up to their end of the bargain? So that, I think, is the main final sticking point. But you asked whether it's going to be a deep deal, a monumental deal, in the words of President Trump. Well, if you look at the timeline they're talking about, 2025 is actually when they expect China to abide by these obligations. And actually, even further on than that, in 10 years, 2029, is when they expect China to have fully obliged by these obligations, according to the latest reports. So that really tells you, is it really deep? I think we'll get a deal, but I'm not sure if it's going to be that monumental.
Okay, so if it's not that monumental, Linda, what's it going to look like and what's it going to mean?
I think what's going to happen will be a couple of things. So one is the Chinese will agree to buy more American goods, and that actually does open up Chinese markets a bit more. There's a lot of talk of agriculture, and I think that is important. But what I'll be looking for is whether or not China opens up to American services companies. That's the biggest export coming out of the United States, and that's one of the most protected areas of the Chinese economy, everything from financial services to business services. I think what we'll also get in terms of the deal are some structural reforms that Chinese will promise. So things like, will they stop favoring their own company? So will they have a level playing field when it comes to finance? I think there'll be some agreements there, but that's where the long timeline that negotiators are wrangling over will matter, because China's going to want 10 years to do that. And you do have to wonder which administration will be in charge in America in 10 years to make sure that does happen. But I think, generally speaking, there's optimism that we could probably see an agreement on those things, which would be an improvement in the coming weeks.
You know, Linda, if we get a deal, whether it's meaty or just an appetizer, perhaps, will that raise global GDP estimates? I mean, will it benefit the global economy, or do you think that's kind of already baked into most of the estimates we've already seen?
Yeah, great question. I think we've seen from the IMF, Christine Lagarde, saying that the U.S. and China need to come to a deal because you're self-inflicting essentially economic damage at a time of a cyclical slowdown in both economies. So I think the markets have priced in having some type of resolution, and that means that we may see a slight uptick in terms of growth estimates for this year. But I think what it will do, if we do get an agreement in the next 4 weeks with another 2 weeks to implement it, is that it'll take away some of the downside risk. That really, it's on the horizon for a lot of companies and economists to say, well, if you can actually come to an agreement so you remove most of the tariffs, because remember, that's the biggest thing that affects economic growth estimates, then that will help global growth stay above 3% this year, and even better, try to avoid some of the significant downside if this trade war had escalated, which at one point it looked like it might. As of March the 1st, it could have escalated to around 3% of global trade between the U.S. and China, being slapped with 25% tariffs. So that's the downside scenario that any trade agreement would avoid.